Hey guys, this is Bruce Marshall from Simpler Trading doing the nightly video for Friday, June the 1st. And exciting day today. I've got today's chart of the S&P 500. As you guys know, I like to keep my charts pretty clean. Look at a daily version, and then we'll kind of zoom out, look at some other things that happened today. So we'll start here with the S&P 500. Obviously, we sold off yesterday and right into the close, and this is kind of typical. There is an end of the month trade typically that goes short at the end of the month, and that was it. But we had a trending pattern all day yesterday, and then big gap up at the open here. This is payrolls. So if you did not see, we had much stronger than expected payrolls, unemployment going down even more. I think the payroll numbers were 223,000 versus an estimate of 190,000. So big gap up here, and then we just really kind of trended higher all day. Obviously backfill a little bit, and then we had a push, higher into the close. So overall, very good day today. And the S&P ended up being up, SPX ended up almost 30 points. Ended up 29.35, which is a super strong day. The expected move was about 18 points, and we end up going 28, so much more than we expected. If you look at this and you don't know the number, and I'll zoom out in a minute, but it doesn't look that impressive, but that's pretty impressive. So that brought a lot of things up, obviously, across the board in the market. We'll look at the other indexes here in just a second, but first I want to zoom out. Well, let's look at the ticks first. So all day long the ticks were pretty constant. I've got a tick indicator here, or an alert at 700, positive 700. So we had strong ticks pretty much throughout the whole day today. Here as well. So pretty much, pretty consistent, and you can see that here. We did kind of, this is actually normal to do a little backfilling. I didn't think this was going to turn into anything meaningful, and it did not. So let's take a look and back this out and see what happened for the week. So here we are for this week. Now we had a short week. Obviously Monday was a holiday, being Memorial Day, and this is Tuesday. So we come in Tuesday morning with a drop, and then just this waterfall selling here. And this was Italy. You guys remember this? It seems like a couple days ago this was going to what was the term? It's going to roil the markets, and it's going to cause all this devastation and destruction and all this kind of stuff. And then by the end of the day, we had already gapped over it, and the market decided there was nothing fundamentally that was going to destroy the whole world economy. Italy, I believe, is the third largest economy in the EU, I believe, but which is significant. But the market kind of shook it off, and the next day we're back to the races again, at higher than the start that we had on Tuesday. And then yesterday we had the NAFTA trade war. I don't know if you guys read all that with Mexico and Canada and all that stuff. And that is one of the things that's kind of if I'm out, looking at the beautiful sunshine, I'm looking over my shoulder, and there's a dark cloud kind of on the horizon. A real trade war could really do some damage. I don't think it's going to turn into that, and I'm talking about with China. And as we see, we're baby stepping this along the way, and this can take months and months and months to work out. So just get used to hearing about it and used to these knee-jerk reactions. But tariff on this is going to cause this country to retaliate, and back and forth and back and forth. And outside of the economy going into a full-on recession, which obviously we're not, we're very, very strong right now. A trade war could actually head us in that direction. So we need to keep an eye on that. Nothing to hedge for or anything like that. This might take you know, I don't know, 6 months. It could take longer. You know, it could take a long, long time for this to all work out. And nobody wants a global trade war. So, you know, just keep that in the back of your mind. So let's back this out a little bit further. That's 2-week chart, obviously. And I have been targeting the 2750 level for quite some time. And we just can't get there. We get close, really close there. We start coming up there. And today I thought, you know, I had a butterfly on for 2750 right here, and I thought we would hit it. And if we would not have had this or this, we probably would be above 2750 by now. But that's, you know, that's part of trading, right? I still continue to focus on this level. Let's go out a little bit further, and so it's a little more meaningful. I'll show you here. Okay, so if we look at this again, you know, there's our 2750 level that we're trying to break through. We'll break through that. We'll get through that. Once we do, you know, obviously we've got upside up here, you know, depending on how long it takes us to get through the next level, which is 2800. And you can see that visibly or visually here. We had a hard time getting through that, and then we've had a hard time getting through 2750. Once we break through here, we may have to bounce off this a couple more times. I hope we don't retrace down here, but if we break through, obviously we may take a few times to break through this, but you know, ultimately I am continue to be bullish. I've been bullish for the last several weeks, and continue to want to focus on, you know, higher prices. So what is that going to look like? Well, obviously, you know, the markets are correlated. They tend to be correlated. I want to look at the NASDAQ, because the NASDAQ, notice the difference. The NASDAQ has been strong, breaking out here. Techs have been lagging somewhat with Apple and Google. Amazon started to kick back up again. Google as well, been very strong. Apple, so forth. We've got a lot of the semiconductors and a lot of the different tech stocks that are kind of coming back to life. And I think the NASDAQ will actually lead us higher going forward. And as that does, obviously we will, you know, even if the S&P doesn't want to, it might be pulled up, dragging and screaming, you know, if the NASDAQ and the Russell continue to go higher. Now, the Russell's been on its own planet here, just never looking back. This was the all-time high here, and we surpassed that here, and we just keep plugging along. Russell obviously is made up of small caps, so those continue to do well. And again, as far as the correlations, Russell's super strong. NASDAQ is gaining momentum. We passed 7,000 on the NQ yesterday. We closed at 7,083 today on the NQ, and look to go higher, higher, higher. Also, remember, we've got earnings season coming up. It sounds funny because we just got out of earnings season, but we've only got about, what, 6 more weeks or so to get 6-8 more weeks to get back into the next round of earnings season. And the market, you know, typically, especially as we get closer, we'll anticipate that, and you know, that could give us some tailwind. So again, you know, I'm still focusing on the upside. I'm not even I'm not really hedged on the downside per se. I've got some things that like calendars and so forth, you know, that can give some you know, some downside protection if things go down. But again, I'm primarily focusing on the upside. I am still somewhat light on the sizing of positions, somewhat smaller than typical until we break out. You know, but the things we want to watch for, the energy stocks, crude. We can watch that with the XLE. Obviously, the financials, very important to the health of the market. The XLF. And, you know, they are starting to, well, they don't look very good right now on a chart. I think they're starting to turn in anticipation of what might happen with the Fed. And then, of course, we always want to watch technology, XLK, for example, and it just continues to do very well. So, again, we want to play this to the upside. And, you know, As always, we want to play to the upside with, with an eye in the rearview mirror, watching the downside and hedging when appropriate. But I don't think it's that necessary right now unless you're, fully weighted and fully invested. Then I might hedge somewhat. But again, I've been pretty light the last several weeks, and I've, been telling people to, do a third size or half normal size or something like that. I have very few positions that are full size at this point, and it allows you to sleep better, in this type market that still continues to zigzag, on a daily basis. So just be aware of that. But again, probably the thing that we'll watch for next week is we'll watch the NASDAQ, we'll watch the tech stocks. I'm still a fan of the defense stocks. I picked up a little more Boeing. Boeing came back to the 350 fire line twice this week, close to that 350 level. I picked up a little more Boeing. I'm a fan of that. I'm still a fan of the defense sectors, the Northrop Grummans and the Lockheed Martins and the Raytheons, etc. But I'm focusing a little more on the technology, the Baidus and Adobes and CRM and Broadcom and Lam Research and so forth. And always Amazon, of course. Amazon, Google's looking much, much better, and Apple. So there's a lot to pick from in that sector. We will know a little more as we get into next week and see, on a day-by-day basis, that's the only way we can play it, how things go. So I hope this is helpful, gives you a broad overview of, of what I'm thinking as far as the markets in the short term and the long term. So hope this is helpful, and I'll see you guys on the next update. Thanks.